Awesome. Well, welcome to the second edition of the VA Loan Lunch and Learn, virtual Lunch and Learn, that is. I'm going to go ahead and start the slide, share my screen here. What this call is all about is having good, better conversations with amongst real estate professionals and the veteran community alike. We will get into some data here that shows that the conversations just simply are not happening and they need to be. So um, First and foremost, the purpose of this call is education only. I am not a certified loan originator. I am a real estate professional, though. However, if you do want individual loan and mortgage advice, please seek out a educated real estate professional loan officer, and they will take care of you. This is not a request or a solicitation for any business. If I see real estate professionals in the chat and there happens to be veterans on the call, and I see you asking for business from a veteran, I'll ask you to leave. And then if you repeat the violation, I will ban you from the call. When it's all said and done, also at the bottom there, the VA loan handbook, there's a QR code. If you want to scan that QR code, it'll take you right to the VA loan handbook. And here's the thing about that VA loan handbook. It's a lot of black and white. It lays out every rule when it comes to the VA loan, but a lot of times the VA loan operates in the gray. So that's why it's important to have conversations like we're having today. So for me, the purpose of the VA loan, and this isn't official, but for me, it's to give every man and woman that serves this country the lowest barrier to entry possible to owning a piece of it. And what does that mean? That means zero down payment, the best rates possible, the most favorable seller concessions, and things that can benefit the veteran over other loan products. Unfortunately, though, we're going to go with the higher stat. Let's just say only about 33% of the veteran community uses their VA loan. And of the 67% that don't use it, half of them have no idea it even exists. And the half that does know that it exists never intends to use it because of bad education. So that stat right there is the one that I kind of cringe every time I read it. And the reason for that is because we have about 200,000 men and women that get out of the military every year. And so if you just do the math, that is number one, 67,000 veterans that don't even know that their home exists or their VA loan exists. But number two, that's 67,000 veterans every year that never intend to use their earned loan benefit product because of bad information. And that's on us. That's 100% on the real estate professional community. So more conversations and things like this will change that. And that's the whole point. So today's topic we're going to get into is entitlement and wealth building strategies that veterans and active duty personnel can utilize through the VA home loan. And entitlement is definitely one of my favorite things. It is what makes it possible for wealth building at zero down. So let's go right in. Entitlement basics. It's what we consider the meat and potatoes of the VA loan. If it wasn't for entitlement, there would be no way for a veteran to buy a home at zero down. Basically, like I said, it allows a veteran to buy a home zero down with no PMI. And the no PMI is really, really awesome because any other loan product, unless you're putting 20% down, you're paying monthly PMI. So that's huge in what they will qualify for. So the way it works is the VA guarantees 25% of the mortgage to the lender so that if the buyer were to default, the lender would be made 25% whole again. So it's essentially a 25% down conventional mortgage, but the veteran doesn't have to come up with that because they earned their entitlement. And think about it from two different perspectives. From a real estate professional perspective, if you receive an offer for a property and it has a VA loan offer attached to it, consider that 25% entitlement whenever you're presenting it to your seller. For all intents and purposes, that is a 25% down conventional loan product that will close and is just as strong, and the lender loves just as much as somebody putting 25% down. So we need to rethink what this VA loan is. And a lot of times people think that they have less skin in the game because they're not putting anything down. No, they're actually putting down 25% because of what they earned. So the entitlement used of the veteran's entitlement that they're using for the purchase is that 25% down in the price. So if they buy a $400,000 home, the entitlement that they have used is $100,000 on a first single purchase of a home and not using it again or just whatever. they basically have unlimited entitlement. So they can buy a $2 million house at zero down if they would like. It all depends on what they qualify for. A lot of, some veterans that do 30 years and have a really good retirement, and they have a service connected rating, and they have a really good job when they get out, they could potentially qualify for that $1 million+ home. So the point is that it's basically unlimited what they can borrow at zero down. And the last little one there is entitlement is restored upon ownership change of the property unless OTR, which stands for one-time restoration, is used. Now, why that's important is because a lot of times people think that they can just pay off their VA loan and stay in the house, or not change ownership of the house and have that access to that entitlement again. The entitlement does not get restored unless ownership changes of the house. So even if you pay off the mortgage, the entitlement is still tied up into that property. And we'll get into why that kind of matters a little bit later. So this is why entitlement is one of the best things out there as far as helping veterans build wealth. It's called second tier or bonus entitlement. So bonus entitlement is what allows an eligible veteran and active duty service member to use the VA loan to buy multiple properties at zero down with the VA loan and keep all of them, or keep as many as possible. Bonus entitlement is also what allows the veteran to purchase that $1 million+ house at zero down. But we're going to focus on the wealth building aspect of it, so we won't get into that side of it. So basically, the Federal Housing Finance Agency, or FHFA, sets county conforming loan limits every year, or CCLLs, which are adjusted annually to reflect changes in the housing market. So basically, that just means they only go up. So for 2025, the standard county conforming loan limit is $806,500, but that number fluctuates because we all know that housing in different parts of the country is more expensive. So for example, LA County has a CCLL of $1,209,750. So what bonus entitlement, using bonus entitlement, the VA buyer may buy multiple properties at zero down, no PMI, as long as the combined purchase price of all properties are under the county conforming loan limit for the area they're purchasing in. And we'll do some quick math in the next slide, but I just want you to have the concept of that is basically if the veteran buys a $300,000 house, they have plenty of entitlement left over if they want to buy another one and keep the first one. All right, so a little more on bonus entitlement. So if the combined purchase price for additional properties ends up over that county conforming loan limit, that doesn't mean that they can't use their VA loan again. It just means that they have to make up for the entitlement that they don't have access to because they're maxed out. So all that means is a 25% down payment of the difference between that $806,500 and whatever that purchase price might be, or sorry, the difference what they have left over and what that purchase price might be, which is not a bad deal because if you could buy a $550,000 home for $12,000 down, that's still a really good deal, number one. And number two, there's an entire suite of VA loan refinance products that you have access to, even if you put that down payment down. And it would be a shame for a veteran to not use it and not have access to these refinance programs and all the other benefits that come with the VA loan. So here's the example. A veteran buys a home at $300,000 and wants to buy again, keeping the first one as a rental. So we take $806,500 and we subtract that $300,000 from it. Now, if there's mortgage professionals out there, I know you guys do the whole calculation of the entitlement and then the purchase price. I like to keep it simple, and we just go by that purchase price. But anyways, $806,500 minus $300,000 is $506,500 of entitlement left over that the veteran can buy, that the veteran can use to buy at zero down. And if they were to move to, let's say, LA County, where the loan limit is much higher, that would leave them with $909,750 of zero down buying power. And so, and again, anything over that is 25% of the difference. So we have a little bit of example right there. A $556,500 home would only cost them a $12,500 down payment. And essentially, like I said, a good grasp of entitlement just means that they have to they have to guarantee the loan at 25% as high as it goes. So if their entitlement ends at 500, 500,000, that's why they have to put the 25% down, because they need to make sure that mortgage is 25% guaranteed. So, so bonus entitlement stipulations. Now, this is where a lot of veterans and a lot of active duty think that they can use their VA loan just to buy zero down properties. You can, but you have to own or occupy. So there's no way around this. Don't try it. Mortgage fraud exists. I'm not going to say they're going to come knocking on your door and making sure you live at the home you just bought, but it's just not worth it, just like a lot of things. Um, Again, it must be a primary residence. So you can't buy like a beach house that you're not going to live in for the majority of the time. But again, we'll talk about strategies around that. There's no official owner occupancy time requirement, but a good rule of thumb is that you need to at least live in the property from about 9 months to 12 months before you consider buying another one. So, and then when staying in the same geographical area, meaning like I want to buy another home here in College Station where I live, it just kind of has to make sense, right? A lot of the VA loan is telling the story of the buyer. And so that can be from everything as their financial situation, as to why they lost the job and have a 3 month income gap, or it could also be why they want to use their home loan again, their VA loan again. Let's say I have a shorter commute to work if I buy this home versus the one I'm staying in. That's a good enough reason. If they want to upgrade, they just had a couple of kids since they bought their first one. That's a good enough reason. You need more rooms. Downsizing. Let's say you are, getting up there in age and the house that you bought 25 years ago is getting a little too much to take care of. Downsizing is another legitimate option or reason. So basically, it just has to be a plausible reason so that the underwriter can understand why they are doing buying a loan or a home again with a VA loan. And the last one, it's a lot of numbers on the bottom there. Basically, the funding fee, there are funding fee requirements for subsequent uses. Now, here's the thing about funding fees. If you have a service connected rating of any kind, you are exempt from paying any of these funding fees. However, you can see that even if they add 3.3% of the purchase price on top of your mortgage, that's still not that bad of a deal when it comes to buying a property at zero down, potentially getting really awesome seller concessions along the way. So now that we're pretty far in, I do want to maybe take a couple minutes here. I just went over a lot. Do you have any questions? Do I need to go back to any slides? Feel free to unmute if you want.
No, that was very informative. I don't have any questions right now.
Cool. And I'll send you this slide deck too, so you can have it and just keep looking at it. And I do record these as well, so they'll be on the YouTube channel too. So
awesome. Thank you.
All right. So let's get into some wealth building strategies. Like I said, using this awesome thing called entitlement. So basically, the easiest one is your basic veteran house hack. And so what this is using the entitlement to the max to buy as many properties as possible at zero down. So the first step to basically any home purchase process is to achieve stable income and get your credit in order. Now, there's no minimum credit score for the VA loan. However, we do have there are guidelines and lender overlays. And so generally speaking, you probably don't want to have somebody buying a home if they have like a 400 credit score, 450 credit score. It's possible. There is a scenario for everything, but you probably want to have them get their credit in order. And the stable income is very important. They need to have W-2 solid income. It can be 1099, but it just has to be tracked over the course of at least about a year and a half to 2 years. And the last thing, a lot of veterans think that their GI Bill money, so they get out and they go to college and they get paid. Unfortunately, they can't use that to qualify for a mortgage because it's not stable. If they were to drop out of college, that money would be gone. So just make sure we're talking with them about that. So the second step is to purchase that zero down home and occupy it for at least 9 to 12 months and get a couple roommates, because let's be honest, hopefully this veteran is, maybe he's just got out of the military and he's, 23, 24 years old. You don't mind having roommates. So get a couple roommates and have them help you pay down that mortgage. So What I like to call is it's called a living expense. So budget your living expense, and anything under that save. So what that means is, let's say you budget yourself to spend $1,200 a month in rent, mortgage, et cetera, whatever you want to call it. Well, if you can get a couple of roommates and they can pay half of your mortgage, let's say your mortgage is 1,800 a month, and you get a couple of roommates paying you $500 a month in rent, then all of a sudden you only owe $800 of effective mortgage per month. And so that means you can save 400 bucks, right? So that's an easy strategy to help save and move and help hopefully have some money saved up for the next one and just overall savings. So the next step is to purchase that second home, zero down, renting out the first. So you are, let's say the mortgage payment is 1,800 a month and you're renting out that property at 2,200 a month. So now you're already netting about, no, you're grossing about $400 a month. So same as the first, bring those roommates along with you. Anything under your living expense budget, save. So now all of a sudden you're talking about having, instead of just 400 bucks a month that you can save, now all of a sudden you can save 800 bucks a month. And so it's just a really good strategy. Number one, to save, and number two, the entire time this other person that you're renting to is paying down the first property, and that's building wealth. And these other three roommates are continuing to help you. It doesn't have to be roommates; it just makes it a little bit easier. And, obviously people have families and things like that. So in step four, if enough entitlement is remaining, you could absolutely buy the third property. Again, it just has to make sense, and then rinse and repeat until you're done. Now, if there's no entitlement remaining, we'll talk about what that one-time restoration looks like. You can absolutely use that and buy again. And so step five of this is, so hopefully by the time you buy 2, 3, 4 properties with this, you have enough passive income that you're now, it's crazy how when you stack more properties, just the what you're able to buy grows exponentially. And so before you know it, once you have 2 or 3 properties, now all of a sudden you have access to those 25% down investor mortgages that, because you're done with your VA loan, you've used it to the max, good job, but now it's time to actually do investor deals and whatnot. So the next one we're going to talk about is really big for active duty, and it's called the active duty PCS portfolio strategy. So basically, the government sends you from duty station to duty station. So you can absolutely buy a home at each one of these duty stations. And all of a sudden, by the time you're done serving this country, 10, 15 years in, however long you want to do it, let's say you go to all 20 years and retire, you could end up with 3, 4, 5 really awesome investment properties all across the country. So how it works is, number one, you're going to want to establish yourself and what you're going to do in the military. The reason I say that is because a lot of people get in and they only do they do their 4 years and then they get out. So it would not be smart of somebody who's only going to be doing 4 years to, now this is just a little inside baseball when it comes to the military. If you're that private E1, E2, to go up to your staff sergeant and say, I want to buy a house, he's just going to slap you in the face and send you back into formation. But once you get, past your first enlistment, and you can request a reenlistment in a new duty station and things like that. Well, yeah, then go ahead and apply for some BAH. And what BAH is basic allowance for housing. A good way of making sure that you can have access to this BAH is request a duty station with little to no base housing. And so once you have access to that base housing, basically you now have access to tax-free money, because BAH is tax-free, and it's qualifying income. So now you can buy that first home using BAH. It's also a good idea to get roommates, but just think about the idea of tax-free income building wealth. I think that's an awesome thing. And one of the worst things you can do, because you do have access to this as an active duty serviceman or woman, one of the worst things to do with tax-free money is to give it back to the government. So get out there, buy that house, and use it to build wealth. And so the last step on this is just basically rinse and repeat. PCS to each duty station and buy homes in them. As you get further along, as your entitlement gets stretched, maxed out, maybe PCS to that LA County, and then all of a sudden now you have another $500,000 of zero down buying power available to you. So, and lastly, use the one-time restoration if need be. I've seen it done on active duty, but it's not common, but either way. So, and the last one I want to talk about is a strategy, because the VA loan, you are able to buy duplex, triplexes, and even fourplexes. You have to stop at 4. You can't buy like 8 unit properties, whatever. Anyways, It can be done by both active duty and veterans. It's very similar to the first two strategies, but with multifamily properties, you just have a lot more potential for rental income and financial cash flow and things like that. So one caveat to that is the price point is going to be higher. So I would say consider partnering with another veteran or active duty service member because you can actually do that. You can combine both of your entitlement and both of your income to qualify for a duplex or a triplex or a fourplex at that higher price point. And so what that looks like is, let's say we have one active duty or veteran that qualifies for a $300,000 home, and then we have another one that qualifies for a $300,000 home. They can combine their entitlement and their qualifying income, and all of a sudden now they have access to a $600,000 whatever they want to buy. And it's a great strategy to basically use zero down to start a business. Now you're in a partnership. Now you are living in one room, he's living in the other room, you're renting out all the other three. And by the time you guys PCS or move on to the next one, it's cash flowing pretty solid. Certain instances, let's say that same veteran that qualifies for 300,000, they want to buy a $400,000 property on their own. Now, rental income, let's say it's a fourplex, rental income from the other three units that they're not going to occupy can be used to qualify. However, it's a little bit harder. They have to have 6 months of liquid reserves. And liquid reserves means like a IRA or a stock account or obviously a bank account. But one thing that that active duty service member have access to is called the thrift savings plan. And they don't always do it, but if they do, it's basically like a IRA for the military. So if they have that, that's another option of using it to use that rental income to qualify. Good rule of thumb: you want to start with a lower quality property and work your way up, because, like I said, you have to have a reason. The reason for you buying the second duplex probably isn't going to be, oh, I bought one that was built in 2006 and now I want to buy one that was built in the 1970s and it's lower quality and less bedrooms. So start low and work your way up. And number two, it's always better to, when you're using multifamily, downsize than upsize. Like, you're not going to have a better quality of living from a duplex to a fourplex than you would. And now they may be out there. I don't know. I've never seen a fourplex that is anywhere near as nice as a duplex. But you can definitely improve your quality of life from going from a fourplex to a duplex. And so just think about that when you're trying to explain to this underwriter, like, why are you buying another duplex in another part of the country? Well, because I want a newer one. I want to, et cetera. We talked about that before. It just has to be plausible. So last slide before some questions, if we have any. So the cool thing about entitlement and these county conforming loan limits is that they basically increase in perpetuity year over year. So what that means is, how we went back and we said that, we can go back to the slide, or I'll do it later. This year, the county conforming loan limit is $806,500. Well, next year, that's probably going to increase because last year it was $766,000. So let's just say it's $850,000 for next year. That just means that veteran now has an additional $43,500 of zero down buying power. So it always increases. And think about it from this perspective. Let's say a veteran does what we're talking about and buys like 3 homes, zero down, and by the time they're 30, they own all 3 and they're done. Well, and now they've had a family, they've had kids, and let's say it's 30 years later and they're in their 60s and it's time to downsize. Well, in 30 years, that county conforming loan limit is probably going to have increased enough to where they can just go ahead and buy the next home, keeping the third one, and then buying the home that they're going to live out the rest of their days in. Another cool thing about entitlement is that all VA loans are assumable, and that was very, very popular, still is, with everybody that bought a home and refinanced in the early 2020s to that nice 3.5, 2.75% interest rate. That veteran can let another veteran assume that entitlement that's tied up into that home. And the caveat to that is that they have to come up with the additional money. So let's say the current mortgage is $200,000 and the purchase price for the home is $300,000. They're going to have to figure out a way to come up with $100,000. And usually, generally speaking, most lenders don't allow second lien positions on a VA loan. So what that means is, like, you can't go get another loan to make up for that $100,000 gap. So it's possible. It takes a long time. It's a very awesome benefit if it's done correctly, but just know that it's out there. And then let's talk about that OTR, that one-time restoration of entitlement. So we call it the magic wand of entitlement restoration. So um, big thing there. It can only be used once. That one is very important, and it can only be used on one property. So how that works is the veteran will pick one of the properties that they purchased in the past. And let's just say in our example of the $506,000, $500 property, they're going to either pay off that loan or refinance that loan to a conventional product or something else other than VA. They then apply for the one-time restoration, and it's as if they never bought that property using VA. So they will have, in addition to that $506,500 of entitlement restored, but they also have the additional increases over time that the county conforming loan limit allows them. So it's a very good way of 5 years down the road doing that one-time restoration and then all of a sudden having like $750,000 of zero down buying power available. So yeah, it pays off the loan completely. The entitlement use for the property is restored. And again, this is the only way, unless you actually sell and ownership changes hands, that entitlement can be restored. So just went over a lot. We got any questions?
Yeah, that's all very good information. I was going to ask, can you go back to, because you said there was a a stipulation that it has to be owner occupied. Can
Mm-hmm.
you clarify what part of the entitlement that was?
Yeah. So owner occupancy means that they have to move into it. So you can't use the VA loan to buy something that you're going to rent out. So
Okay.
and it has to be the primary residence too. So a lot of people think they can use it to buy like a second home, like a beach house or something like that. Basically, you have to occupy the home 51% of the year. And again, it's not like they're going to knock on your door and make sure that this is the case, but good luck trying to convince an underwriter that that beach house in Galveston is going to be your primary home when you have a really nice home here in College Station, and your
Yeah.
job is here in College Station. There's not
Okay,
that
that
yeah.
makes sense.
Yeah. So basically, the owner occupancy is key because in the end, the VA loan is made to provide home ownership, not build a real estate portfolio. However, it's available as long as you're, like I said, the VA loan operates a lot in the gray. As long as you are not violating any of the rules, there's a lot of latitude, a lot of leeway that veterans can have and use to really build wealth. And so yeah, but owner occupancy is kind of a must. So it gets tougher as veterans get older and they have larger families. And I get asked this all the time. People always want to buy a rental property with their VA loan. I said, look, it's possible, but you have to move. And they're like, oh, but we like our schools. And I was like, okay, well then you're gonna have to go the traditional route. And you probably should have started this a little bit sooner. Again, it is possible, but you have to follow the rules and maybe move into that home with your family just for that 9 to 12 month um, occupancy requirement, and then move out a year later. If you can just tough it out for a year, all of a sudden there's your zero down rental property. So
So is that how they build upon like moving out of the home and then applying entitlement to a second property?
mm-hmm,
They have lived in it for those 9 to 12 months prior
mm-hmm.
to. Okay, okay.
Yeah,
I'm following now.
you're not going to be able to like buy a property and then 3 months later move out and buy
Yeah,
another one. You have to, like I said, it's just got to pass that plausible deniability test. Like if you were to submit another VA loan for another purchase 3 months after you bought the first one, the underwriter is going to just say nope, not at all. However, I mean, like I said, circumstances change though. Like let's say you get a big job promotion, and all of a sudden you got to move in 3 months. Okay, well that makes sense. Like I said, the VA loan in the end is a story about the life of the active duty servicemen and the veteran, and so there's a letter of explanation for everything. But good rule of thumb is try and be in the property between 9 to 12 months before buying the next one.
thank you. Thanks for clarifying that.
Yeah. Anything else? Let's try to exit out of here.
I think that's it. Thank you so much, Kevin.
Yeah. So I will stop sharing. Awesome. Well, we uh we obviously do this every other Thursday, and it's a different topic every time. So I do have I'll send you the slide deck, and I do have them all on my YouTube channel. I'll send you that link as well. You can go into the one we
Awesome.
talked about the previous one. But what I want to do is, I want to get other professionals involved too over time. But yeah, we'll just pick one topic, and the whole idea is just to, I hope that you now at least have an idea to where if a veteran were to come to you and say, "Oh, I've already used my VA loan, so I can't use it again." Now you have a little bit of dialogue and information and things that you can say in order to have these better conversations. Because remember that stat that we talked about, how 67,000 veterans every year don't buy a home, and then 67,000 veterans don't even know they have a VA loan. Well, that's probably a
Hmm.
good reason as to why we have this veteran homelessness problem that we have. Because if we never let them become homeless to begin with, then I think we can put a dent in that. So, better conversations like this is exactly what's going to solve that problem. And I appreciate you being here.
Well, I appreciate that. And I know also it kind of clears some things up for me too, because you know, I think there's an idea out there that VA loans you can use it once and
Mm-hmm.
you can only use it for that property, and then you resell,
Yeah,
and
you
then
don't
your
have to
VA
sell.
loan goes away. And so, but you don't necessarily have to
Not at all.
if you move. So
and
that's
and
good.
think
Good
and think about
info.
it think about it from this perspective. So I just had a situation where a couple of my people were trying to be they were building a new home, and the builder kept forcing them to reduce the price of the home that they were selling drastically because they needed to get it sold in order to buy the second one. Well, I was able to step in and say, "Hey, look, this stipulation right here says they have plenty of entitlement. They don't need to sell this home." So we kept the home at the right price, and we got them a lot more money in the end than somebody else would have said, yeah, let's reduce the price, reduce the price, reduce the price. So just by knowing things like that going forward, we can help out a lot of veterans. Let's say they do want to end up selling it, but they can sell it for the price that they want and not as like a distressed price reduction that they have to do, you know?
Yeah. Yeah.
So
Very good.
anyways,
Very
yeah,
good. Thank you.
yeah. Appreciate you coming on, and we'll do these more. Bye,
Sounds
y'all.
good. We'll see you later.